You'll forgive me if I'm almost giddy today. I know that I'm always a little bit wacky, but I mean, come on. It is what I call Randy Kirk Christmas anytime that there's an earnings report, an earnings call. And then in addition to that, the book is launched, and I'm going crazy trying to manage my day in order to make sure that we maximize book sales right off the get-go. So just let me mention, if you haven't bought the book yet, please go out and buy the book. It's only $2.99 on Kindle. The print versions will be out later today or tomorrow, and the Audible version, no, that's a couple of weeks away. But get the print version, I'm sorry, the Kindle version or one of the print versions as soon as you can, and then review. Please review the book and give it 5 stars. So okay, so I'm pretty excited. Now the markets, not so much. The markets are kind of they're kind of flattish to down, even though earnings have just been fantastic. Now, Netflix's earnings were not so fantastic. We'll talk about all of that in a couple of minutes. But the markets are down a little bit, not really significantly down, mostly just flat. The rout on gold has paused, at least for a minute. Still down, but not as much as it was. We'll talk about that as well. All right, we've got Reigns 1220. Where have you been? He's been he's been not active, and now he's back. He says 1 year later, FSD version 14 is proving my theory right. Not my theory, his theory. With greater intelligence, it enables earlier crash prevention. In future versions, you won't be able to measure how safe AI is by how often you intervene, because every time you're about to act to prevent a crash, FSD will likely have already done it, leaving you no chance. When FSD perceives potential hazards far in advance, human intervention naturally becomes less effective. That doesn't mean that AI is perfect. It will still make mistakes, but in a distribution that we won't possibly comprehend. So there you go. There's an interesting thing to think about. It's kind of that will seem sentient, the fact that it can, uh, but you won't even notice it because you won't know that there was even the likelihood of an accident. But I think you will. I think there'll be times where you'll say, "Oh my gosh, that reacted faster than I ever could have." Benzinga this morning says, according to prominent Tesla analyst Troy Teslike, oh, look at that. Troy's getting a nod. The EV giant is set to beat analyst consensus estimates across the board during the third quarter result. On Tuesday, in a post on X, Teslike, who is known for accurate outlooks and predictions on Tesla's performance, forecasted a non-GAAP earnings per share of 66 cents against consensus estimates of just 59 cents a share. They expect the company to generate 28.4 billion in revenue, which was again ahead of analyst consensus of 27.3 billion. Boy, I hadn't seen that 27.3 billion. Most of the numbers I've been seeing on revenues were in the 26s. So maybe those have been increased recently. Longtime Tesla bull Tom Nash made a bold prediction on Tuesday. This is continuing with the article, saying that the company's stock could more than double from its current levels, heading to $900 a share within 6 to 12 months at most. People are starting to catch up with me. The bottom line is quite simple. Tesla's headed to $900 per share, Nash said in a new video, adding that it's going to get there whether you like it or not, and it's going to get there a lot sooner than most people realize. He cited Tesla growth drivers to justify his target, such as AI, FSD, Robotaxi, energy, and obviously robotics of all kinds, claiming the company is placing itself as the leading gold standard in most of the most important secular trends we're going to experience over the next decade. The stock scores well in Benzinga's edge stock rankings with a favorable price trend in the short, medium, and long term. Look at that. Yahoo Finance says this: a major focus at the conference call will be on the Robotaxi rollout across the U.S. and volume projection trajectory for cybercabs, Optimus robots in 2026. According to Tesla investor Nancy Tengler of Laffer Tengler. And she said this in a statement to Yahoo Finance. I read through bunches and bunches of articles this morning because everybody, of course, is saying something about the Tesla earnings call today. When I say everybody, all the financial news people are, putting at least a paragraph or two out. It basically, it's pretty repetitive. It's like, well, probably looks like a beat. So the fact that they're saying it looks like a beat means that might not move the stock. I think in the community know that it has more to do with the call than it does with the earnings. And a couple of articles even pointed that out. The Wall Street Journal showed a chart which showed what happens after earnings with Tesla. And it's like, pick your poison. Muskonomy rather says this morning. He says Morningstar senior analyst Seth Goldstein keeps a sell rating on Tesla, setting a fair value of 250. He believes the market is too optimistic about Robotaxi. It says a full launch is still years away. All right, we got Yahoo Finance is at 56 cents. Market beat is down at 43 cents. Tip ranks 55. Zacks is at 46, and Market Watch consensus says 55 cents. And I've seen other people saying the consensus is 59 cents. I think an article we just read said 59. So, these guys get to pick their consensus when the real number comes in and go, well, see, it was a miss. And here we go with the X community. Tesla's EPS estimates for today's earnings day. So here we go. I cannot underscore enough. 0.82, 82 cents. That's the highest one. Curious Peggy is at 73 cents. Tesla Fan Metal at 72 cents. Troy, of course, at 66. Gary Black down underneath consensus at 64 cents. And Matt Smith, well under consensus. I didn't have a chance to really dig into what Matt thinks, but he's down at 58 cents. I did a poll on X, and the vast majority of you guys think, well, at least if you voted in that thing, that we're going to be much higher tomorrow morning on the stock than we're closing at today, or closing at before the earnings call. Let's see. With the EV tax, here we go. We've got the Uber folks said, hey, with the EV tax credit gone, they're going to start paying drivers $4,000 to switch to EVs in order to accelerate adoption. It turns out that, according to The Verge, as Uber rushes to meet its pledge for 100% of trips in electric vehicles by 2030, Uber is offering grants of $4,000 to swap their gas guzzlers for zero tailpipe emission vehicles. The company's also dropping its Uber Green branding in favor of the more simple Uber Electric. Okay, this is Randy Kirk. And you know what to do. You hit the like and subscribe and all that stuff, and then you go buy the book. And by the way, of course, the link will be in the information below. Major earnings reports this week, according to Grok. When I say this week, actually, we already reported on Mondays, so this would be yesterday's and this morning. So Netflix, Q3 EPS of $5.87 missed estimates that were at $6.97, with revenue slightly below expectations. Also, amid subscriber growth slowdown, stock plunged over 8% in after hours, signaling investor concerns over competitive pressure, maybe also programming problems, maybe also too woke, and maybe some people are just abandoning Netflix. I think there's a trend. Coca-Cola has a profit beat with 1% unit volume growth driven by 14% surge in zero sugar. Revenue edged short due to challenging environment. Shares rose 4.1% on the news, and they said that the consumer is resilient. Where we hear that before? Always the consumer is resilient. 3M revenue dropped topped estimates with focus on high margin products and cost controls. Diversified segments showed strength. Stock went up 7.7%, which helped the Dow get to records yesterday. They talked about excellent consumer efforts also. General Motors, Q3 results exceeded expectations on strong EV and truck sales. They raised their 2025 profit outlook amidst robust North American demand. We got to get those cars selling again. All of them, if they sell, we sell. Shares soared nearly 15%. Northrop Grumman, which is not as important in terms of our analysis because they don't really deal with the consumer, but they also beat and shares advanced 2%. GE Vernova, now that's one we do pay attention to because this is the one that does the small nuclear reactors. And their Q3 results reaffirm full year guidance with gas power backlog up to 62 gigawatts and electrification orders 6.5 billion year to date. The stock rose nearly 4% pre-market, signaling investors' optimism in renewables. AT&T beats on wireless subscriber ads and on fiber expansion. They beat. Revenue aligned with views despite broadband competition. Shares climbed 3%. Hilton, they beat on everything. Occupancy hit multi-year highs. Stock up 2.5 pre-market as leisure corporate demand supports premium branding in hospitality. So they are saying, the consumer's doing fine. Texas Instrument, of course, in the tech space, Q4 sales guidance missed a little bit of analog chip weakness, they said. Q3 EPS beat slightly. Industrial auto segment were soft. Shares slipped 4% pre-market, weighed a little bit on the rest of the market. All right. Truflation, a little bit up overnight to 2.27. Goods still sitting around 2.37. Core at 2.14. Services at 2.2. And PCE at 2.39. That's down. So Truflation, thank you very much for that. And so no matter what you see on the CPI on Friday, this is the real stuff. And by the way, mortgage rates finally beginning to fall, also down to 6.17 with a VA at 5.9. This is boding very well for a pickup in the housing market. And then the president of the United States is sitting at 48% approval rating as of last night. All right, we got to take a look now. We have Tesla still staying down a little bit. In fact, dropping down 1.4% at $436.41. So we're starting to see maybe the beginnings of people trying to make their move, trying to decide how to play this afternoon's meet. And the Dow is down 0.21, the NASDAQ is down 0.35, and the S&P is down 0.14. So overall, the market, the only thing they got to look at right now is earnings and maybe what's happening with the White House. And right now they're saying, we'll take a beat. And Tesla is also, obviously going to be impacted by the fact that we have that meeting later today. All right, and then we have got the Magnificent Seven, mostly. No, I would say it's half and half. So yeah, half and half, slightly more up than down, and the VIX up a little bit this morning at 1847. So I'm not sure why the VIX is up this morning. And then the Cathie Woods are mostly down this morning, with a couple of them up and the rest of them down. And let's go ahead and look. The bonds were up a little last time I checked, but still doing well. Well, they're up 1.3 basis points now, which might be impacting the Cathie Woods a little bit. Still sitting at well under 4% at 3.976. You've got oil up $1.36 this morning, but still we're looking at $58.58. It really needs to come up more than that. We've got the natural gas down a little bit, but man, still sitting at $3.47. So that's extremely high. Now, okay, gold. Gold was down, I think, a lot more than this, but it's still down $29.50 this morning at 4,079, something on the order of 8% from its all-time high. Silver actually rebounding upwards again, 0.88 up, but it had a huge drop yesterday, like 7-8%. So it's under $50 now at 48.11, and copper up 0.31 at $4.98. Well, somewhere it must have fallen because yesterday it was over $5. So I'm not sure what I missed. All right. We've got the dollar up this morning, 3-day rally going on, 4-day rally today. If it keeps going, Bitcoin down 3.41%, down $3,816 at 108,086. And Ethereum down even more, 4.74% at 3,818. All right, there you have all of that stuff. All right, what do we got today? We got Jeff Lutz. I haven't decided. He's either going to be on before the earnings call, say, around 11 o'clock this morning, maybe. That's a possibility. Or it'll be on after at the regular, like 7 o'clock, 7:45, something like that. But Jeff Lutz, I got so many questions for Jeff Lutz that have nothing to do with the earnings call. That's why it can be either before or after. I got questions for Jeff that be related to the earnings call, but not really specifically. And then, of course, very busy afternoon with Brian Wang primarily. I'll be appearing on Brian White's show after earnings report and before the earnings call, and then also right after the earnings call. Brian Wang and I will both give a couple of minutes about what we saw on his show. And then Brian and I will do a complete analysis of the report and the call that should be out at around 4 o'clock, something like that. So look for that. I promise you it will be the most comprehensive thing you are going to hear. Because why? Because we don't just concentrate on what happened with Tesla. We look at it in the overall perspective, and that's what the other guys just don't do. All right, so watch us later today. Last night, we had, every time that I have Nicholas Gibbs on the show, it is startling and information packed and excellent. He gave recommendations and approaches that he uses on how he does his pre-earnings call planning, some specific things he does with shorts that is still bullish. Anyway, you want to watch that. The card is right there. All right, I'm done with you. Get on with the rest of your day. Oh, don't forget to buy the book. It's Randy Kirk. It's been great talking to you.